and welcome to the Wendell Effect. My name is Brandon Wendell, and I'm going to be your guide to my view of the U.S. equity indexes, actually the sectors, sector rotation, and ETFs, as well as a couple of individual stocks. So let's go ahead and jump into it. Before we do, I just need to remind you, we're just doing this from an educational standpoint. I'm not telling you to buy, sell, or hold anything. I'm not a registered advisor or anything like that. And past performance, no indication of future results. You can have losses in the market, so do not trade with money you can't afford to lose. We're also not subject to trading restrictions, so please, um, keep that in mind. We can have a position in a security or initiate one at any time. Anyway, before we get started, you can go ahead and stay in touch with me if you'd like. You can email me at brandonwendell.cmt@gmail.com. Hit me up on Twitter at TraderBW. And you can also, of course, hit the like and subscribe button to help us out on YouTube as well. You can even get the alerts from the new videos that come out on a regular basis. So we're going to jump right into sector performance and ETF analysis for those sectors, as well as some of the hot stocks going on this week. Last week, you can see we had a huge gain in technology and communication services. The NASDAQ has been the strongest index, and this week, nothing's changed. As a matter of fact, we've had bigger gains. You can see for the last 6 months, not including this week, we were up 22 and 23%. Now we're up 25 and 27%. So there have been more gains in that sector. And we've actually also seen some gains in other sectors as well, but nothing compared to what we're seeing on the NASDAQ leaders of communication services and technology. Again, last week, this is what we looked like. Everything was broadly rallying. We actually fell off a little bit in common tech, but again, this week, we're actually seeing a little bit of a pullback. Discretionary is doing well, though. Notice it fell back, though. So this past week, I should say, ending on the 10th of June, or sorry, 9th of June, we saw a little bit of a surprise here in utilities going to the upside. From the week before, it was positive, but not nearly as positive as it was. And we saw a little bit of a rally in energy as well. So we'll see what's going on with the individual sectors and what that means. Consumer discretionary shot through supply, but we knew it was going to. I talked about it last week. It was testing the supply zone a second time, plenty of bullish momentum. We went right through. So it looks as though we're going to get a little pause. Keep in mind, we got the Fed news coming out this week. If you haven't noticed on my other videos, I talked about it on the equity index videos and actually the energy markets too. But the Fed announcement coming out on Wednesday will have an impact. We may be a little sideways until then. And we may even get a little pullback to kind of retest this area as a support level before we shoot up towards my ultimate target, 167.74 and then 176 eventually. That's not going to happen this week, the 176, maybe 167, 168. Onto the communications, we also have hit a target as well, and you see we retreated, but it's just a pullback. We're going to continue to push higher. 66 is well within reach for this week. That's a possibility. So if we get more gains, again, in NASDAQ and communication sector, look for XLC to rally and lead that way. Along with technology, you see technology didn't really pull back. It went sideways. So that is suggesting we have a correction based on time, not on price. And you can see before that happened, it happened for a while. And actually, we did pull back a little in price, but we had a pretty good rally out of it. So I kind of expect that to happen again. If we can break the highs of last week, we should be able to run up to 172 almost no problem. So keep an eye out for that after this pullback. This is a very strong index still. Materials, on the other hand, is a little bit weak. I mean, we did have a pretty strong pullback to 78.6, but we couldn't get above 60 on the RSI, and that's a telling sign. So we put in a peak right here in price without going into bullish territory, suggests that prices are going to push back down towards 75 this week. So we'll keep an eye out for that. On energy, this also made a peak. Well, not quite, actually. We haven't made a lower low after we made the higher high right here. So on the individual candles, we need to make a low to actually establish this as a high. When you make lows below 40, that's bearish. If you make highs above 60, it's bullish. But when you fail to break those thresholds, it means you might be headed the opposite way. We made a high here as we had some bullish activity last week, but we failed to make a peak above 60. That tells me prices are likely to drop. So keep an eye out for that. Consumer staples also very, very bearish, but just kind of died off. We had that bearish momentum. Last week, we went choppy and sideways, lost momentum, but it looks like we may be getting ready to continue. If the stock market continues to go up, consumer staples fall out of favor. They're more of a safety play. So we could see a continued push back down if we get a good rally in the markets to where we hit 70.88 in my next projection. Looking at the healthcare sector, this also ran up into an area of supply I talked about. Actually, on Monday of last week, it gapped right into it, and then Tuesday sold off from it. But we didn't go into bearish territory when we pulled back. So there's still some underlying bullishness. And if we can rally back up into that supply, it depends on the momentum. If the RSI is higher than it was on Monday of last week, then we'll get through that supply and continue slowly to move to the upside. But if we end up going up to our prior highs and we have less momentum showing, that's when the drop is going to occur. So keep an eye out for that divergence signal. Utilities were the big surprise. I did not expect this to happen. As you can see, I was looking for a bit of a pullback because I had my Fibonacci's in, but looking at last week, we actually pulled back pretty strong. However, again, we have not yet established bullish movement into, or sorry, momentum above 60. So if we end up making this a peak, this green candle, we got to break the low. If we break the low of that candle, look out below. We're going to drop pretty quickly. I don't know if we'll make 63 by the end of the week, but we'll try. Now, if this is not a peak where we continue to go higher, watch to see if we can break above 60, especially as we come up to that supply, then we'll just pause there before breaking. And then this won't happen until the week after. I mean, we might be able to try to push up just towards 68, but I don't see us hitting 68 this week. So just kind of keep an eye out. If we do break the high from Thursday, I say we're probably going to end up somewhere around 67.50, between 67.50 and 68 by the end of the week. Looking at the financials, XLF, this has also lost a bit of momentum. You can see we tried to rally, pulled back to our 50% retracement from our big move down, and it's just the top of the range we've been stuck in. So we just still didn't get enough bullish pressure to kind of break out of the range yet. So I'm expecting us to continue to drift back down towards that 31 level. If, of course, we break out above 33, 32, we need to have more momentum to be able to sustain that move. Otherwise, watch for the false breakout. It usually leads to a big move in the opposite direction. Finally, for the sectors, real estate rallied a little bit and ran right into supply. So it's a tested zone, but you can see what happens. This is where you get false breakdown out of that range. It went for a while, a pretty good sized breakout, but it basically, when you break out of a range falsely, you usually slam back to the opposite side of the range. So here we had this range, we broke down, slammed back up to the top of the range. If we break out and can't get through the untested supply at about 38.50, then we should come slamming back down to 36.20. So right now, we're kind of on the cusp where there is enough bullish pressure to push us up towards 38.53. We could see a little bit of bullishness this week. Again, a lot of it comes down to what the Fed is doing and interest rates as well on Wednesday. So a few trade ideas. We're going to do follow-up first, and then I have a few new ones. EPAM. Basically, this one did gap down, ran down, and when it came into the demand zone for entry, unfortunately, we were below 40 on the RSI. When that happens, I do not take the position. So it's just too bearish. Stay away from it. We're not going to deal with it anymore. Okay. That's why I have that as a filter. It really helps me out with not taking bad trades. Previously, DXCM on the 4-hour chart, remember, we were looking for a pullback to buy. Well, hopefully you were watching this one because it worked. Not only did it pull back, it slammed down in that zone, did not go below 40. And you see the difference. It actually hit target number 1 already. So I'm hoping you were able to take advantage of that. That was a really good opportunity. And, love to see when people have good opportunities that they're able to take advantage of. Anyway, it should continue to push up towards target 2. Probably need to move your stop up around 121 if you haven't done so already. Keep a trail stop on it as well. PPL on the 4-hour chart, we were waiting for a rally up into an area of supply for a short, and that one also has triggered entry. Unfortunately, we're going a little sideways. We didn't really come down very quickly, so keep an eye out for this one. If we break this high inside the zone and we have more momentum or get above 60, you're going to need to exit the trade. Okay, it's just good. You might have to take it for a smaller loss. However, if we start to turn around and drop, then obviously everything's fine. So for some new trade ideas coming up for this week, we got number 1, Akamai on a 4-hour chart. If we can pull back, got an area of demand here with lots of buying pressure running out of it. 87.66 to 86.31. Place to stop below, whatever you're comfortable with. And then my first target is actually where you are right now anyway, at 92.56. Target 2, I'm using projections because I don't have overhead supply at 95.57. And then finally 97.71 if you want target 3. Next, I have ANF, Abercrombie and Fitch, also waiting for a pullback to break out some new highs. I mean, we could end up stalling at this little doji-like candle, but really the origin of that buying pressure really began here at 31.62 to 31.07. Place that stop somewhere in the 30s there, the high 30s. I'm targeting 37 and 40 basically. So looking for that pullback before it rallies. And DFS, Discover Financial, also waiting for a small pullback. We had a pretty good pop to the upside out of this 110 area. Basically 109.79, 107.78 with a stop just below, targeting 117.05, 121.54. So that's what I got for you this week. If you got any questions, again, please let me know. Love to hear from you at brandonwendell.cmt@gmail.com. You can also find me on Twitter and DM me there as well at TraderBDub. If you follow me, I do put a lot of good information out on a weekly or daily basis, really. And of course, please hit the like and subscribe. I appreciate it. You can also get the alerts for new videos that are coming out on a regular basis. Until next time, everyone, trade safe, trade well, take care. Thank you for being here.